Okay, everybody, here we go. It is me, Gregory Mannarino, Sunday, July 9th, 2023, and this is my newest segment of Markets to Look Ahead. It's going to be freaking lovely, as always. Let's start off with this. Recently, just last week, something very, very interesting happened with this market, and you probably know what I'm talking about. Risk. Risk in this market has crossed a threshold, at least in my opinion, and those of you out here who are frankly smart enough to keep your eyes on the Mannarino Market Risk Indicator, the MMRI, again, free to everyone on this planet Earth. There is a link in the description of this video. For months and months and months, we have been watching this 250 target, 250 target, 250 target, because again, the last times we crossed 250, this market did not like it at all. There was a lot of effort going into keeping rates suppressed. There still is, and we're going to talk more about that as well. But this market has not responded favorably, no surprise to me or you. Again, after the MMRI has crossed 250, we are firmly above 250 here. The market has been selling off every single day since the MMRI has crossed 250. The 10-year yield, let's focus a little bit more on what's going on here. The 10-year yield here in the United States, which is the benchmark, has made a significant move higher. However, we're sitting pretty solid here at about 4.06. If in fact, let's put out a hypothetical real quick. If in fact we start seeing 4.1, 4.15, 4.2, 4.25, bang, 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 forget about it. This stock market is going to melt down on an epic scale. Not just here in the United States, but this is a phenomenon around the world. I mean, it's amazing that we witnessed this, you and I, as of late. Risk in this market crossing the 250 line. Global stock market selling off. Again, look, the market is a freak show on an epic proportion, and in many ways, in multiple ways, it makes no sense to anyone, especially those that don't understand the drivers here, being that the debt market is the driver of the stock market. The debt market drives everything. As a matter of fact, you know this, but I'm going to tell you again, the stock markets of the world are derivatives. They could be considered derivatives because, again, they're deriving value from an underlying asset. That underlying asset collectively is the global debt market, which is a ticking time bomb. It's ticking louder and it's ticking faster. Again, central banks, by vastly inflating the debt, buying it all, keeping rates suppressed, has created an environment like we have never seen before in the history of the world. Massive distortions across the spectrum of asset classes because, again, when rates are kept suppressed by central banks, in other words, the free market or the market is not deciding value, it's central banks deciding where they want to keep rates, in this case low, so they can, again, reinflate a stock market bubble. You know how this works. When rates are kept suppressed, it opens up a doorway. Cash makes its way into risk assets, stocks, and real estate. And you got, again, a hyper bubble, a hyper super bubble with regard to these asset classes and distortions across anything else. And this suppression of the price action of precious metals and commodities actually overall is also a side effect of this. Again, you get malinvestment, cash coming out of things it should be going into and into things it has no business going into. And this is why you have distortions and you get market bubbles and everything else. But the fact of the matter is, and you know this, again, better than anybody if you follow this blog, all this is going to correct. No. Let me be more specific. Way over correct at one particular time. And suppressed assets, at least in my opinion here, precious metals, physical silver, the most undervalued asset in the world. These are going to increase in multiples and multiples and multiples moving forward. I still say this, people, and just let's see if I'm right. All right. So just remember what I'm going to tell you. I believe sincerely that at one point we're going to get a 1-to-1 ratio with the Dow Jones Industrial Average and gold. There is a metric called the Dow Gold Ratio, Gold Silver Ratio. I've spoken about this for 10 freaking years here. And the market, the stock market being in a place called La La Land, I think we're pretty much on the same page. Again, there's no price discovery here when you have a mechanism where rates have been artificially suppressed since forever here, but none more so since 2008, since the last meltdown. Let's talk about that real quick. This is a chart here of the Fed's balance sheet since 2008. In 2008, the Fed's balance sheet sat at about $1.7 trillion. We are now about $8.5 trillion. And this is what it's looked like, the Fed's balance sheet. This is going back 2008, about $1.75 trillion, to where we are now, just since 2008. And you know this phenomenon because the Fed can't stop. And, they're trying to play up that, the Fed's balance sheet is shrinking a little bit here. This is going to rebound and massively skyrocket. But look at the trend. It is absolutely incredible. 1.75 trillion, $8.5 trillion. That's profound. But, it's so funny. This is the Federal Reserve's public balance sheet. All right, what you're allowed to see. The Federal Reserve off balance sheet, this is supposed to be the total assets of the Federal Reserve, and that's what they want you to believe. This is not true. This doesn't even remotely reflect what's actually going on. Again, where does all the cash come from to fund wars? Oh yes, by the way, we just sent over another multi-billion-dollar Bidenstein, another multi-billion-dollar weapons package, yet another one, to Ukraine, and now there's talk of yet another one. Where does all that cash come from? Do we have a war chest? Does the United States have a stash of cash somewhere just laying around? No, it comes from the Fed. That's off balance sheet. That's all stuff that you don't see. And no one's allowed to see this stuff. Again, most corporations, okay, those of you who work in the corporate arena, in the upper echelon, you know exactly what I'm talking about here, okay? You have the public balance sheet, which in this case would be this lovely thing. And then you have the off-balance sheet, stuff that, maybe the public shouldn't be privy to. You understand? Even in publicly traded companies, there are two balance sheets, and that's exactly what's going on here with the Federal Reserve. And with regard to this trend is not going to stop. Yes, according to the Fed's balance sheet, we have dipped a little bit here. But this is nothing. This trend, again, we've had dips in the past as well. Look how they've all played out as well. I mean, look at this recent dip and then how much higher we went. We get a little dip coming up here, and we're going much, much higher. Again, tell Greg Mannarino one more time, what is the goal of every single central bank? And that is simple. It's to buy assets with their product. They can print cash out of thin air. They can add it to a digital screen. They can fund wars and whatever else they want to do. Okay, the Federal Reserve can lend cash to any nation for any reason they want to. They could fund terrorist organizations, and they do as well. They funnel cash all around the world. As a matter of fact, a phenomenon that's been going on since, I don't know, forever now, is the Federal Reserve funneling dollars to nation central banks around the world who are buying assets with dollars. See, this is another secret that's off balance sheet that you're not allowed to know about. But if you do enough research and you know where to look, you're going to find out that this is completely true. Anyway, with that here, debts and deficits continue to balloon out of control. We found out just at the end of last week that global, and this is no surprise to you if you follow this blog, global industrial production is at crisis levels and going to get much, much worse here. I mean, just talking about a crisis. Since the last meltdown, 2008, at a way back here, all right? Okay, back there. Defaults on auto loans, people were going, oh my goodness, what's going on here? Well, right now, today, this was also reported last week, auto loan defaults are at a higher level today than they were during the financial crisis. But you're not supposed to know this stuff. Again, do your own research on this. It's incredible. It really is. So I want you to be aware of this because this stuff is not really broadcast too much. So another weapons package for Ukraine. And let me ask you, since this cash has to be created out of nothing, explain to me how this is not inflationary. You know how it works. When cash is added to the global pool, it dilutes the purchasing power of the global currency and you get inflation. Oh, really? Wow. You mean just like we have now and it's going to get much worse? Yes, and the tales and the lies and the distractions and the deceptions, especially being that this is an election cycle, are going to get much worse. Again, the thing behind the Resolute desk, no, I do not have any respect for the man. Those of you that are going to take offense to this, because I know he has a big, fat, ugly fan club, and good for you. You see, he tried to lie to people that inflation was coming down. It is not coming down. It continues to rise. People are earning less money. Over the last 25 consecutive months, real wages have dropped. And I'm going to tell you a big secret. It's going to be 26 months, 27 months, 30 months. It's not going to stop. The middle class is being systematically erased. You know that. I've been telling you this since time immemorial, and it's not going to stop. The other thing I think is, it's getting some attention, at least from all of you out here, and just be careful what you wish for. But the U.S. dollar the threat to the U.S. dollar is increasing very rapidly, and the world is getting sick of the United States exporting its inflation to the rest of the world. And the Federal Reserve being, I don't want to say irresponsible, because this is by design here, central banks around the world killing their own currencies by inflating, literally sucking the purchasing power out of it. But now you have this whole BRICS nation threat, and it's definitely catching on here. And what this tells me is you can expect more war. There is no way on the planet, off the planet, or anywhere else that the Federal Reserve is not going to respond in some way. Again, the enforcement arm of the Federal Reserve is the United States military. It's in its entire arsenal, including nuclear. So let's see where or who they're going to point that weapon at. I mean, obviously it's being pointed at Russia right now. In this war here, that's hundreds of billions of dollars, soon to be trillions, are coming out of your pocket. And again, there's no outcry, there's no anything. All people just sit back and they deal with it. Meanwhile, debts and deficits are ballooning. Our economy is in free fall, and it's only going to get much worse. But people are just so lulled into a sense of they have no voice, because we don't. We have no representation. We have no voice. They just kind of let it go. But understanding where we're going, people are they're going to wake up. I mean, don't just take my word for it. We're hearing it from the IMF. We're hearing it from the BIS that people are in for a rude awakening, and especially here in the United States. The U.S. dollar, again, isn't in danger immediately of losing its reserve status. I think it's on its way there, but again, there's going to be a lot more to play out here and a lot more war. So you can count on that. Absolutely. It's just in fact, that's exactly what I wrote today. I was writing down a few things I wanted to talk about. Here's something else, just moving on. So mortgage rates right now, and auto loan rates are skyrocketing, and going back to loan defaults here across the board, credit card debt, household debt, personal debt, people are defaulting here at their fastest pace since the financial crisis. That really wasn't a crisis, because Ben Bernanke said it was contained. Yeah, it was contained. He said specifically, repeatedly, it was contained to the subprime. It turned out that it really wasn't, and it pushed the entire world into a financial crisis. But the man gets now, what, $1 million per speech? Lovely. I wouldn't spit on a piece of toilet paper and give it to the man as a payment to hear him utter any kind of a word or a syllable or a sound out of its mouth. Okay, the man should be in chains. He should be in shackles. He should be locked up. But that's besides the point here. This is something else I covered just a second ago, and I want to talk about it again just real quick. Expect more fake data like you can't believe, more distractions, more deceptions, more lies. Just, go back to the video that I did at the end of last year, where I talked about trends that were going to happen this year. One of my top trends was you were going to see more lies, more deceptions, more distractions. And I think that's exactly where we're going here. It's very hard to argue that. Anyway, so let's step back. I outlined all this stuff for you, and I want you to take a mental picture of this, all right, where we're at. And keeping in mind, look, but none of this stuff, anyway, is a surprise to you. There's just no doubt about it. All of you out here, we've nailed it to the wall. We really have. I mean, not 100%, but pretty darn close, honestly. Anyway, with this market here, we need to keep our eye on risk. Obviously, this market is not liking what's going on here. Global bond market sell-off, the largest inversion in history with regard to the yield curve. Clearly, this is a pointing towards an economy that is not just bad now, but is going to get a lot worse moving forward. We have every single leading economic indicator pointing lower. In other words, things are going to get worse, and this is by design. Again, we are living under the rule here, at least in the United States and around the world, of central banks. Central banks are the enemy, public enemy number one. It's not you or me. Again, they try to convince us that we're all our enemies, and we try to put these people in a box and these people in a box. And the reason why they put people in boxes is because, again, you could point at them and say, oh, they're the problem. Oh, no, these people are the problem. Again, it's the whole divide and conquer mechanism that most people fall through that trapdoor. And we're not each other's enemies, people. They are the enemy. But as long as they keep you and I thinking that we are the cause of the problem, that we are each other's enemies because of race, religion, creed, sexual orientation, whatever it might be, well, then of course, then they win. That's how they always win here. You have to hate these people because of that. You have to hate these people more because of that. But all of this, and there's no two-party system. You all know that. At least you should here. They're all working towards the same goal. The goal is to empower the Federal Reserve, in this particular case here in the United States. But this threat to the dollar is real, in my view, and I think it's going to be exceedingly interesting to see where it goes down the line here. If the U.S. dollar were to lose its reserve status, the lifestyle here in the United States would change even more rapidly than it is. And I mean, right now we're in the middle of this new feudal system, this neo-feudal system, this new two-tier society. Unfortunately, most people are going to fall into that lower rung here. Middle class is being exterminated around the world. Overlords and servants, and this is what they want. And they want more control, much more control moving forward. And I think we're pretty much on the same page with all this. All right, people, with that said, what else is there to say? Keep your eyes on precious metals. Keep your eyes on commodities in aggregate. Let's see where this whole thing with risk goes, which is getting out of control. We are firmly above 250 on the MMRI. If you do one thing every day, just one, okay? Check the MMRI every morning and see where risk is. Again, are they going to pull off a miracle? Are we going to start to see the 10-year yield start to drop as more debt is purchased here by the Federal Reserve, in this case by central banks? Are they going to, again, this is an election cycle, so generally during election cycles, stock markets do very well. They try to keep the thing behind the resolute desk, whoever it may be at any particular time. Especially this guy. You see, this guy is playing the game totally. Funding wars and pulling cash out of nothing, funding whatever he can. Expand, inflate. Playing right into the Federal Reserve. He's the puppet. Supreme puppet, I think, right now. But they all are. They all play the game too. They understand how it works. But this guy, he's taken on a whole new meaning. But that's again, what else would you expect where you have no representation, you have no voice at all? And this is, again, the collapse of an empire, in my view. This is, all empires fall for the same reasons, and corruption is number one. And I think the level of corruption is just, frankly, off the Richter scale, only to get worse from here. All right, look, I'm going to stop talking. This video is getting kind of long. Please, people, share the video. Get it out there. Comment on the things I have spoken about this morning. I appreciate that. Those thumbs up are extremely valuable. Look, I count on you, all of you, to get this out there. All right, without you, this is our thing. This would be nothing. It's all of you who have made this channel a success, honestly. All right, love you a lot, and I will see you in the morning. Take it easy.